Good afternoon, everyone. It is Tuesday, June 17th, 2025. Welcome to today's edition of Trading Trends. So I wasn't on the show, had a birthday and a Father's Day. Both were marvelous and good times. So let's get into the market, a very commodities centric market. Some things we were spot on about, some things we were way off on. Let us see. As you remember, possibly, we were expecting, they pull up this fancy little doc. We were pulling up in the meantime. I was talking last week. I talked about how the market was going to have a bullishness to it, a bullish accumulation phase ending on or around right around June 15th, which was 2 days ago. So basically, the end of last week, earlier this week. I expect that to end right around 6:06 or so. We'll take a look at the charts when we do the intraday in a minute. But first, I want to go through the doc. And now we had a small move down today, down about 80 bips. And of course, a lot of geopolitical news with Iran, Israel, U.S.'s involvement. So let's get into this. This is what this doc is highlighting, of course. Oil spiking, a very crazy chart. We'll take a look because it's at the focus of a lot of trading here. So really, though, today, international and commodities focused market, solar was, we'll take a look at that. We were right and wrong. We said solar was going to have a very bullish 2 weeks. They got slammed today, the entire industry, because of a lack of tax credits. So they got absolutely slammed. And our superstar, we were pounding the table on European financials. That got hit pretty hard today, as did Spain. These were all multiple standard deviation movers. So we'll take a look at that. And oil and volatility with a big comeback, a big comeback. So first off, as we always do, let's take a look at the intraday chart. Un momento, por favor. Okay. So really fast, just some single stock movers that really moved the tape. 4% down for Tesla here. Stock looks like a true hole to me. They're really stuck in the middle of its 1 year range, although it's had a very nice resurgence lately, very playable. Palantir hit 142, essentially. I'm rounding, but it hit all the way up to 141.68, and then ended up closing down 2%. Apple down 1.5. Stock looks absolutely horrible. There probably is a catch-up trade where you sell the basket and you buy Apple. But man, because it probably will come back, but I do not like that stock. It looks absolutely terrible, and said everyone, basically. Other big moves, IWM with a big move lower, down to 1%. Broadcom down 1%. MicroStrategy down almost 2%. Oracle down 1%, and they did hit Bitcoin, Ethereum even more. IBIT down 4%. Okay, so here as we go to the intraday tape, the bell opened right here. Okay, and really, I always pay attention, obviously, to the orange line, a volume weighted average price. We were really doing okay, holding above water here until the 12:30 time frame here in the United States, Eastern time frame. A European close right around there, and we started falling out of bed. I think there were Trump comments here talking about what Iran's going to do with nuclear weapons in the next 24, 48 hours short term, and it really got fear in the market. You saw the VIX started to rise, and we actually started selling off from about 601.5 here, SPY price, at 12:30 p.m., all the way hitting a low of 597, we'll call it. So pretty decent sell-off there. And we actually are just right around there right here after hours, just shortly, a couple minutes after the close. We're trading 597. So not so great there, down 85 bips. Like I said, Russell took it worse. As I zoom out here, going to the 1 year time frame, as I said, right around the 15th, I saw a top of around 6. We were specific on the level, 603 to 606, 607, right around there. We said we were going to get within a rock's throw away of the all-time highs, but then it was going to stall just due to the extreme movement it's had here from mid to late May at 576, for goodness sakes, and we get all the way up there. It takes quite an even utmost surge to get through all-time highs. I didn't think it'd have it here with that kind of momentum. You see the moving average start to stabilize. Just sees that you did a little bit too much on the elliptical. Maybe just calm down, get a little breath of water, sip of water, and get a breath of fresh air. I think that's what the market is doing here. I said the 15th it was going to end. The top actually came, the short-term interim top came at 605 on June 11th. So about off by 4 days was that 15-day cycle. So still looking at the counts here from what I have, see about a bearish distribution phase for about another week and a half. That will take you to about right around that 592 level. I really like that for a place to rest within about 1% lower from where we are today. You can make up the headline, potential geopolitical fears, the Fed doing nothing tomorrow, maybe just the algos trading on potentially what could be a lower volume week, whatever it is. Also, Thursday is a close day for the market on Juneteenth. So kind of potentially you'll see what happens here, but I expect sideways trading and then a consolidation right to that 50-day moving average. I think it makes a lot of sense. Market doesn't have to do what I say, of course, but I think that makes a lot of sense. Actually, I misspoke. The 50-day moving average is lower at 581. I'm referring to a rest and consolidation down to the 21-day exponential moving average that has been very reliable lately. It is this dark kind of maroon line there. Okie dokie. So that is the tape there. So yeah, pick your spots. But I think mid-July, as I said, right around that like July 4 timeframe, slightly right after that, I do believe we will have new all-time highs to about the end of the tune of 615 in SPY right around here and a nice surge. If you look at the semiconductors chart as well, very bullish, a beautiful kind of a flag. It consolidated exactly where it should have been after doing basically nothing since last July. That's 11 months of essentially doing nothing, of rest for the quarterback of the market. So a great thing to see there. All right, so there is the story on SPY. Let us get into the ETFs, the parts of the market that really, really moved today. All righty. If you have a ticker or something, put in the chat and we'll take a look. So we'll look at the standard, multiple standard deviation movers higher first. We got oil here absolutely rip-roaring, up 4.5%. Crazy looking chart. Obviously, this is momentum. I'm sorry, news driven and everything based on the war. Because look at this chart and look at how much time the oil has spent below its 200-day moving average, which is this black line. It peaked in January, 84.5. I'm looking at USO, not crude dollar per barrel. Not the contract. I'm looking at USO here. Overbought here on the 52-week high, and then they really sold it again when SPY was experiencing 52-week lows. They sold USO all the way down to $61. Came close to it again right here on around Cinco de Mayo, and then of course in the past, and we're going to look at USO as it's been having one of the best weeks. It's actually the best place to be in the past 5 days, averaging 3% up a day. Today, up nearly 5%, and a great looking candle here. The 200-day moving average is back here at 72.69. We'll call it 73, and it's lived under 73 for much of this past calendar year. So just a very interesting chart to see here. Obviously, on geopolitical events and fear, this can always get pushed a little bit more. Again, the 52-week highs on this guy is back here at 84.5. Can it get there? Yeah, possibly. But to me, this run has begun, essentially back here at $66. This has been an amazing run. The 200-day moving average is starting to curl up, which is wild. We haven't seen that in quite some time, maybe since earlier in the year. So it looks, decent here. Obviously, overbought 77 RSI ever since this comeback really happened here after the close above the 200-day moving average when it closed up 4% that day. June 11th is really where this has really started to become, overbought then. So all in all, my full target for this, to be frank, was around 7, even with the volatility expansion. If I factor that in, it was around 76. So this is, to me, a little bit overdone. I wouldn't personally chase it here. And I think this can easily rest over the next 2 weeks. It's going to take some time. But I think over the next 2 to 3 weeks, I personally wouldn't want to go nuts getting long oil. That's just me personally. It's had a heck of a rise. And I think over the next 2 weeks, I kind of see this one resting down to the two. I'm just not a big believer in oil. I know it's the last one to catch up and people are just playing it for that specifically, but I still see this kind of resting over the next 2 weeks down to about $73, which would be a $9 reduction. Trades you could do, you could sell calls if you think this is the end, but be careful. A news headline, Iran presses a button, etc. This thing sparks. So be careful being short options in this. You can buy put spreads that are going to be cheap here, and alternatively in terms of the IV spike, of course, but in terms of buying the puts them, I don't think they're going to be super big here with a super rally attached. So take a look at the liquidity, but USO potentially July or August put spreads if you're not super convinced. I just think this has come a lot in a handful of days. But that is oil up 5% today, and the best place to be all week for the past 5 days. Second big mover today was volatility. It did surge here up 6%, and that's significant. It's interesting. We were saying last week, let me pull this up on a different time frame here on a different screen. We were saying before that this was going to sink down to about that 47 mark. I really thought it was going to get down to 47 right around June 11th or so. Instead, it got to 48.60, so pretty close there. The 200 moving average is 51 even. I think this is starting to be now. This is going to be, of course, when I say SPY is in a bearish distribution phase for another 10 days, then this is going to be the inverse of that. So I see, just to actually be, yep, pretty much through about the 25th, about another week or so. I think this potentially peaks and hits its head right around 57 to 50. 59, I don't think would be insane. I think 59 is probably my target here for the next 1 to 2 weeks, probably closer to 10 days, actually. And 59 would be the equal level of VXX May 23rd, essentially filling this gap when we had that 13% decline on May 12th. So that's what I anticipate happening here in volatility, with a clear top put in on that April 8th scare when we hit 91. But again, volatility, I want to see what happens here. It does get to 59 on the next go round. And then are we essentially dropping to 51? Just interesting to see where the volatility is. Again, always hard to chart a non-timing series chart like the volatility, VXX. And then they bought bonds today in a big way, up 1.2%. That is significant. There weren't a ton of areas they got bid up today. Bonds, oil, and volatility were one of them. Ugly looking chart here in bonds. My gosh, that's why I always almost kind of laugh when I see them up big. This looks like a technical beauty, just simplicity. If it gets more than 3 closes above a 200 moving average, you should start getting really your risk management allocation put out here, because only oversold as well. You'd want to sell calls when it comes even near this 9.5. You see how far away we are from it here. It just seems technically easy to do there. I think this is going to have an ugly 2 weeks. I was kind of surprised that they bid it up today, but again, the market was overall held down, so they bought bonds, the safest thing you could, essentially. But I think this has an ugly 2 weeks. So again, we think bonds will fall, we think rates will rally, and that will potentially put a lid on the market. Kind of makes sense from a narrative perspective, but I do not like this one. I think this actually heads very close towards new 52-week lows over the next 2 weeks. The 52-week low set on May 22nd is 83.30. I think that is potentially at risk here. It looks like it's basing here, stuck between 87 and 83, which is what it's been doing essentially since for the past 6 weeks now. But I see potential breakdown in the cards going down to potentially new 52-week low. So this 84, 83 handle to me looks dead set for the next 2 weeks. We shall see. Okay, big losers now. And that was where a lot of the action was today. Solar, yikes. So we had a call on this. I said solar was going to enjoy a nice 2 weeks. We were talking about it on the morning show with JC and Treas and the guys. And I said it was going to, and this is what's so amazing to me, when it gets to the 200 moving average, look how just technically easy it is to sell it. You tell me technical analysis doesn't mean anything, that the algos don't know what technical analysis means. September did it, 2 taps, bang. Here, got within 1%, bang. This, please, loser. This 3 closes, almost a week worth of full sessions. A falling down 200 moving average is something very, very difficult to overcome. It's trying to do it here. It's still falling. Boom, down 9%. Of course, it was news driven. Regardless, that was the move there. So my just full perspective, when we had said that, I said that the bullish accumulation phase for TAN specifically was going to end on or around the 18th, which is tomorrow, right around 36, 37 bucks. That's what I had said. What ended up happening was on the 16th, yesterday, it got to basically 36 bucks. So this is the way technical analysis helps. It really, really helps deal with things in probabilities, which is super important when you're dealing with options execution and entry. So here we are, solar, really having a hard time. Sub 50 RSI for the first time since April. Yikes, when it was just a couple weeks removed from the 52-week low. I think this was a nice kind of like an exclamation mark on that move. I thought it would have been potentially easier to see. Right here, when it gets above 34.70, you got to whack it. Again, ask me in a month, and my perspective is going to be lower on solar, probably near 33. This chart looks ugly. It's been a loser all year. I think it has an ugly 2 weeks. It's had a very, like I said, very bullish, 3 weeks. So trees don't go to the sky. I think the floor on this is around 30, and I think that's potentially where it falls to. Some zigzag potentially. It looks like it does want to spend some time here with a 33 handle, and the news was too heavy for it today. But I think after 2 weeks is said and done, This one's around $30. So not new 52-week lows, like kind of what we see in the bond chart. But this looks like solar looks like it's going to be going a little bit lower, to the tune of 5-ish percent or so. So that's that for solar, in my opinion. All right, let's look at a superstar, kind of opposite of solar. European financials, they hammered it today, down 2.25%. That's pretty significant. So you're coming off of all-time highs on the 6th, just 11 days ago, $32, and now we're at 30. Again, what we said here, and we actually call this, watch the videos, I said I want to at least see on an all-time high a 70-plus RSI. It could only get to 69. I don't love that right here. And you needed this to get to, 76, 70, 82, something like that would have been really convincing. And from false moves come fast moves, essentially. And now we've dipped all the way down to the 50-day moving average. So pretty dramatic fall if you're in that space. That being said, I think you're getting into an absolute superstar. If you could, I think you're getting a little bit maybe greedy. But if you get in here, I like it right here at the 50-day. Honestly, right here, you're getting a superstar. I think this is going to try and, base here with a 30 handle. And this should get to about 31.5 in the next 2 weeks or so, and longer term, more of a target like 4 to 6 weeks, 32 to 33. I think this still goes to new all-time highs. It just is interesting to know this is the first time this has also been sub 50 RSI since the week of its 200-day tag. So it's kind of dramatic when it falls under 50 RSI. It looks like a visit to the 200-day could possibly happen, but this group, obviously, we've all been looking at it. It had a rip roar from 24 to 32. That's a monster move of a third in just 2 months. So again, trees don't grow to the sky. Still amazing flows in this group. I would want to be involved, and I like it. An entry right here at $30. You might have a couple of another off day or two, but I think this is at 31 to 32 soon in about 2 to 3 weeks. But they hammered it today, and one of the big culprits in this was Spain. I'm not sure if something there specifically or BBVA and whatnot, but this was down 2.5%, and that's a big move for Spain. You look at the chart; it looks very, very similar to EUFN. I believe Spain, this ETF actually is made up of significant financials between Santander, BBVA, and I think there's another one that's escaping me right now. Great flows in this guy since February, March. Great looking chart. Several different periods of overbought since Valentine's Day. Looks great. Nice slope. Not a touch of the 200 moving average since early February. You're getting this guy off of 52-week highs, 44 to 42 in a hurry. This looks great. Again, if you can get in, so 50-day equivalent on this would be 41.5. I don't know. Although it is an ugly looking candle for today, maybe you get another day or so, but I like this one under 42.5. I think this is destined to get to about 43 in the next 2 weeks pretty soon. Again, this isn't a super volatile ETF, so do understand that. Next, no repeating charts, but I will put them up for edification here, of course. The top 3 gainers of the past 5 days, okay? Oil, the number one place to be. Of course, these are going to be very headline driven. USO of 15% over the past 5 days, on an average of 3% a day. Today, bucked that and did 5. Just an absolutely amazing looking chart here. We'll see if it continues, but we gave our story on that now. I don't want to chase it here. Uranium, the second best place to be, up 10%, or an average of 2% a day. Today, they hit it down 1.3%. As I take a look here of uranium, coming off of 52-week highs just yesterday when this sucker hit 39.30. They did hammer today. This has just come a lot recently. I like this one fully targeted around 36. This has had a splendid rise as well from 27 all the way to 36 in just a handful of weeks. Again, you see a convergence of moving averages here at 33, and it's trading 10, 15% above that. So tough one to see here. I like the momentum, obviously, but they've sold it. You saw how high it was there, and they've been selling it there down to 37. Looks like the gap could be filled. I think that would not be shocked if this heads towards about $34 in the next week to 2 weeks. This has just come a long way. Again, this has been overbought since May 9th. A lot of stuff has worked right for uranium technically since this May 9th, May 12th, that Mother's Day weekend, right around here with a 27 handle all the way to 38. Could that be the end of this leg? It may have a little bit more to go, maybe 38, but then I think it wants to spend some time and go towards 33 over the next 2 weeks. Next one, the third best place to be in the market for the past week, natural gas up 9%. I was wrong on this one. We had said they will, during the bullish accumulation phase of the market, I said they were going to drop things that didn't have earnings, that weren't impressed, Mag 7 related, things like a natural gas. Well, color me wrong on that. Nat gas up about 2% a day for the past 5 days. Today up 3.5%. Tough looking chart here, a rising 200-day moving average. So wind is to its back. A nice day today, up 3.5% to the almost close at the upper Bollinger Band. Similar movement like it had on May 9th. That signals a short-term top. And again, the 52-week high for this guy back on March 10th at 24. Your 200-day moving average support is at 1680. I just don't love this right here. I don't think it's absolutely going to fall out of bed, but I don't like it for the next week or so. I think this wants to visit about 15.5 or so. I actually am not bullish natural gas. I think it goes below the 200-day moving average over the next week. I don't think that 1680 holds. So to me, trades that pop out would be, selling 17 half call spreads or 17 half calls, maybe against, you got to see what the liquidity is on these. Natural gas is an interesting contract, but selling like the 18 calls, I don't think it's going to get you a ton. Buying 17 puts potentially, but I'd have to check the implied vol and IV rank on UNG right now. But some trades come out. I just don't think, I know it's had a stellar week, natural gas, and it's been a commodity-driven PDBC type market, but I just think this has a visit soon with a 16, potentially 15 handle. All right, so those were the three winners of the past week: oil, uranium, natural gas. If you load up on commodities, the portfolio, congrats, you crushing it. Of course, a lot of the news has been your friend. Okay, the losers of the past week. I haven't looked at this in a while. One of the stars of 2024. The Jets ETF down 8%, not horrible, but of course, your first victim when you see oil soar to near 52-week highs, of course, are going to be the folks that use a crap ton of oil, and that's going to be your airliners. Direct cause and effect. This looks to be continuing in a distribution phase to about not a ton more to go. Of course, it depends how much oil surges, but this looks like it wants to go to about 21 even, 21 quarter, right around there. So a little bit more bearishness for airlines. It's got their work cut out for them with a 200 moving average here at 2274. It looks like it's going to start stabilizing soon. So a tough group here is airlines, and it's been the worst place to be in the past week outside of Ethereum. I didn't do Ethereum because I don't like the parameters of the ETF in terms of liquidity and tracking, but Ethereum has had a really ugly week. After it's kind of gotten to its 1 year 50% Fibonacci retracement, and then it got dikembe'd. Second worst place to be in the entire market this week, solar. We're not going to go into this one too much today. A lot of the losses, but last 5 days here, TAN is down 7%. I'm trying to nitpick here and look for the losers. So it's the airlines, solar, much because of today, and then the ITB, home construction down 7%. So we're looking at what's going on with rates. Fed's tomorrow, but we're expecting nothing from them. You'll see what the commentary is. But this group looks to go lower. This looks like the top of its run here. A nice rally, very tight actually, from 87 to 95, and then all the way back to 87. What say you now? I don't like it. I think this has an ugly 2 weeks and actually goes very close to new 52-week low. I think about $85 even. A horrendous looking chart is home construction. No reason to have been in this name, honestly, in all of 2025. Pretty amazing. With a low essentially coming on April 9th with a SPY low at 83, but this looks like it's getting very close again. All right, so the top three trades of the past 5 days, again, long oil, long uranium, long natural gas. They've been absolutely crushing it. Congrats if you were in those areas. We told you where to chase potentially and where to stay the heck away from. What else? We'll see if we're back tomorrow with a stocks show. We'll try and do that. Thursday markets close, and then Friday we'll try and do an ETF wrap up. And maybe the NBA finals wrap up. Again, crazy markets. Thought the Thunder were going to do it about 4 months ago. Pacers put them on their back. Looks like the Thunder will have a parade should they win. And it's just interesting. Sometimes you're right, but you get there in the wrong way. I thought it was going to be about the Celtics or against the Cavs. Those guys get hurt, and then these guys step in. Different result. That's what you have to do. Deal with probability. That's why I use technical analysis for. Go Thunder. They're the best team in the league. Peace.